Hello everyone. Today we are going to talk about what is happening to the payee in 2020. Now, the tax payee or pay as you earn is no more in 2020. From 1st of January this year or 2020, a new tax system is introduced that is called APIT or Advanced Personal Income Tax. Now let's look at what has changed. The first thing is the threshold has changed. As an example, if you earn more than 100,000 previously, you need to pay tax. Now this threshold has increased to 250,000 per month. It means if you are earning less than 250,000 per month, you do not have to pay taxes. Now, let me clarify something. If the total of your salary and any other income exceed 250,000 rupees, or in other words 3 million per year, then you must open a tax file. The other element we need to understand is the total responsibility of maintaining and paying tax is with you, not with the employer. Now this used to be with the employer when it was pay in 2019, but from 2020 the entire ownership or the responsibility will be with the employee. New tax system is divided into 3 different slabs. The first slab is if you are earning between 250,000 to 500,000, you need to pay 6% tax. Then again, your earnings are between 500,000 to 750, you need to pay 12% tax. If you are earning more than 750 per month, in that case it would be 18%. There are a set of qualifying payments which are exempted from the taxation system. As an example, now I will show you what are these exemptions. Now the first thing first, this total amount of qualifying payments are limited to 1.2 million per year. So let's look at the qualifying payment categories. The first one is health expenses incurred, which includes contribution to any medical schemes you have involved in. The other one is educational expenses. This includes you as an individual as well as your children's educational expenses. And any contribution to the approved pension schemes can be deducted from the tax amount you are paying. And again, expense incurred in purchasing of equity and security. If there is a housing loan you are paying, so what you can do is that interest amount you are paying can be deducted from the tax. Now you can't deduct the entire installment. There is a difference between the payment or the loan installment and your interest. Each of your installment is divided into 2 sections. One is the interest, the second part is the capital. Now you realize if you are just starting a new loan scheme, you will be paying a huge amount of interest in the initial stage, so that can be divided from the tax before you are paying it. I think the best way to understand this is with an example. Let's look at what we have here. You can see the first one is the total employment income or your salary. So in this case 900,000 for all 3 months, January, February and March. Then we need to add any lump sum payments. Now there's a high probability you get a bonus in this 3 months as well. So I have assumed as 100,000 here, and we need to add other income as well. Other income means any income you get out of your salary and bonus. As an example, if you have a rental house, you are earning you have a side hustle or you have another business, so all these information or all these incomes should come here. Now in this example I have just put it as 50,000 rupees, but it may vary depending on you. Now when I add all these, you can see the total income for last 3 months is given. Now you don't need to pay for this income. There are exemptions. So what is the exemption? per month 250,000 is exempted from your income. It means 750 can be reduced from your income. So that's why I have put as 750 should be deducted. Okay, what else we can deduct? So the other thing we can deduct is the qualifying payments. So as we discussed previously, the total amount of the qualifying payments for the last 3 months, let's assume it's 50,000. In that case, that also can be reduced. In another word, I can reduce 750,000 plus 50,000, that is 800,000 can be reduced from the total income. Now when I do so, I get what you call taxable income. In this case, we have 250,000 of taxable income for the quarter 1. Now then, according to the chart, you can see in the right side, till 750,000 actually you just need to pay 6% the tax. It means 2020 Q1 you need to pay 15,000 rupees of tax. I think this gives you a better idea, better understanding of the tax system and how it works. Now the government of Sri Lanka has declared you need to pay the first installment of the tax by the 15th of May 2020. So you need to make sure by 15th of May 2020 you need the first payment or the payment for the quarter 1. There are 2 ways you can do the payment. You have the option of paying via your employer, or you can do it by yourself. Now, difference between these 2 ways, when you are going to pay for it. As an example, if you select, or if you have an agreement with your employer that employer will deduct, so that would happen monthly. Each and every month your tax amount will be deducted from your salary, just like it used to be with payee. But if you decide to pay, you can pay quarterly. So after 3 months you can do the payment. Now the question is, which one suits for you? Now there is an easy way you can decide this. If you are having qualified payments or extra income, then you should consider paying by yourself. To make it clear, if you are having qualifying payments such as the educational expenses and housing loan interest, in that case I would advise you to do it by yourself, because you can deduct that amount and do the payment. The other scenario is you have other income apart from your salary. In that case also you can add that income and do the payment.